Welcome to the Passive Income Podcast. I am your host, Dividend Dave. Please be sure to join the Passive Income Posse by clicking that subscribe button below. Super excited for today's episode. We are episode 91. Unbelievable. 91, actually now 91 and 92 individual guests. We have the Dividend Diplomats team, Bert and Lanny. So let's go ahead and give yourselves an introduction. Bert, why don't you go first?
Sure, absolutely. I'm Bert. I'm one half of the Dividend Diplomats. Lanny likes to let me know I'm always the shorter half of the Diplomats, but he reminds me quite often. But no, I've been in the dividend investing game ever since I met Lanny in 2012. So it's been over a decade. I always cut myself short a year. So been investing, watching the income grow, and just honestly having a fun time doing it. It's great seeing the income grow, seeing the income tick up, and it's obviously much more fun when you get the chance to do it with someone like Lanny.
Nice.
Too nice, Bert. And yeah, Dave, again, we appreciate you guys having us on here. Definitely subscribe, everybody, and tune into this episode here. But yeah, I'm Lanny, the other half of the DD, the Dividend Diplomats. Met Bert back in 2012. A bunch of car rides we had through public accounting, going to client engagements, and always preach dividend investing. I've been dividend investing though for, definitely over, 13 years, been investing for 14 plus years, 14 and a half, just about. And yeah, it's been a long journey, got the scars and the wounds to prove it, but yeah, many lessons learned along the way. And, it's about time always in the market versus time in the market, as we preach throughout our, articles, videos, etc. But dividend investing is what it's all about. And Dividend Dave, I know that's what you're all about as well.
Yeah, for the most part. Yeah, definitely passive income. We talk here a lot on the Passive Income Podcast, mostly about dividends, but I've had several guests who are either physical real estate investors as well. And, there's lots of different ways to generate passive income. And I agree with you guys. Dividends is definitely one of the best ways. I do want to. So you're both over a decade now, and I'm guessing at that point you're starting to see that snowball effect in action.
Oh, yes. Yeah, no doubt. Yeah, Bert, you want to touch a little bit on the snowball effect first?
Yeah, and that's kind of the fun part, and that's what we always preach to beginning investors, and that's what's fun when you see like the tweets out there where someone's like, "Hey, I got $10 of income. I started this." I'm like, just keep going, going, keep pushing, because soon next year it'll be 50, next year it'll be 100, next year it'll be 200, and then once it gets going, to your point, the snowball starts. But yeah, I mean, we started from back when I first started getting like a $2 dividend to now that same stock's paying me hundreds of dollars every month. So it's pretty sweet seeing that impact. And nothing's better to me than when you get hit with a nice dividend increase, you wake up, you see like the 10% dividend increase, and you know that you're going to get rewarded with even more income on the next month, which then turns into the shares, which then turns into more income. And it just keeps on rolling and rolling and rolling.
Yeah, so you're just basically, over that decade plus, you're just dollar cost averaging in and dividend reinvesting. So everything just goes back in, and the snowball just gets bigger and bigger. So that one company that you started with $2, a $2 dividend way back when, and now it's, like you said, into the hundreds of dollars. So
yeah, I think Lanny, you probably have a good example of one with
Yeah, I do.
Yeah, you set and forget one. So if you want to share one of those, I think that would be a cool thing to put up.
Yeah, Dave, this is for all the community out there, just to really talk about the proof in the pudding here. One of my first individual stock investments, again, I'm all for people doing individual stocks or ETFs, whichever flavor, you choose. But one of my first individual stocks back in, I would say, I don't know if it was 2009 or 2010, was Lockheed Martin LMT. And, I used to scrape every dollar together, right, to make an investment trade, especially when trades used to cost money, guys. So it's only gotten easier for you to invest. So just remember that if you're listening right now. And, I put $2,005 on Lockheed Martin, we'll call it 13, 14 years ago. And I haven't put I haven't been investing into Lockheed after that initial investment that long time ago. So now that investment of 2000 is, worth over, as of now, obviously market can fluctuate, but over 22,000, and
Wow.
it produces over $500 in forward dividend income. So you better believe what we call the yield on cost right now is over 5% at the moment.
Wow. Amazing.
Yeah.
So
Yeah.
And so
that's
that's just with
compounding.
drip set on Lockheed Martin, obviously. So every time the dividend rolls in, you're getting another bit of a share on it, or a fractional
That's
share,
right.
or full share, or whatever.
That's right. Yep.
So,
100%
so over
right there.
14 years, you've just seen that snowball, like set it and forget it.
Set it
Exactly.
and forget it. And it's, 10x its value, and the dividends have, blown the cover off. So yeah, very fortunate. Obviously, that's just one example. But you could do that as well with ETFs or other, dividend aristocrats or kings.
For sure.
As I say, the Lockheed one's powerful because their 5-year dividend growth rate's 8.58%. Their 10 years dividend growth rate's over 10.24%. So that is the perfect example of a start, set it, forget it, and watch that snowball roll.
Yeah. Wow. That's an amazing example. That's awesome.
Yeah.
Lucky. That was a good lucky one. After doing, obviously we preach, a few small dividend screening metrics. And I will say I used a lot of those same metrics back then that we use now, with the payout ratios, price to earnings ratios, and growth history. And, this just met that criteria way back then. And hey, it's continued to pay dividends for me, quite literally.
Yeah. Oh, amazing. And so, Bert, do you have any kind of examples like that, or any
Yeah.
winners that you'd like to touch on?
Yeah. It's nice to talk about the winners for a change.
Yeah, we'll talk about the winners first before we get into the losers.
Yeah, no, I mean, I'm pulling up my portfolio now. One of them, I've been buying a few shares recently, so the answer is slightly different, but Target was one for me, where we bought Target, God knows how long ago. If you recall, there was, I can't remember the exact number of years, but it was, say, like 7 or 8 years ago when Target was left for dead. You had Amazon and Walmart, and things were just going terribly for Target. They didn't really have a great app, a terrible online experience. And then they did a turnaround story. And during that time, we loaded up on Target to the tune of, I bought 90 plus shares of Target. And over time, that position grew. I think I'm trying to pull up my cost basis now just to make sure I have the right answer for you. Yeah, we were buying them in the high 60s, low 70s in chunks. I didn't buy it all at once, but over a very short period of time, we loaded up on our Target position. And now it's the position's at 13,500. I've added a few shares from there. So it went from small dividend income to larger. And now with Target, we are earning over $440 of dividend income. So we're closing in on the $500 mark. And this would have looked better if we answered this question 4 months ago before Target ran into some issues. But I think that's also part of the point. Is Target's been through some bad stuff before. They obviously rode a nice wave. They're having some issues now. They're in a little bit of a depressed cycle, and then they'll probably be back to some form of business as usual again. And the answer would be even better next time. And that's what we're hoping. That's why we're adding a little bit here and there.
Just for clarity, is that 400 quarterly?
Oh no, annually. I apologize. Yeah, annual dividend income. That would be sweet if it was quarterly, but we're not quite there.
Yeah, nice.
Yeah.
Right. Okay, so we've talked a little bit about the winners. I guess, yeah, let's touch on some losers because we all have them in our portfolio.
Yeah.
What are the ones you don't want to talk about? Let's talk about that.
Oh yeah. All right. Well, I'll jump in here since Bert just went. Yeah, guys. There's not investing unless you've had a couple, bruises and bumps along the way. Some I know we all kind of still hold in the portfolio. Some that we might have wiped our hands clean. The one that obviously comes to mind right now. You would think I would talk about AT&T right now, but I actually won't. I'll talk about Paramount right now. Paramount, ticker symbol, PARA. And back when they were, you rewind back the time, they had a few name changes along the way. I think we're all aware of that with CBS. So they've kind of changed quite a bit along the path. And obviously streaming is very expensive. Creating content is very expensive. So when Viacom and Paramount came together, Payout ratios look great, big media platform, everything sounded great. I mean, heck, who didn't see Top Gun last summer? I feel like I know a few people that have seen it dozens of times already. So I was like, oh man, this is great. They've got this library, Nickelodeon, you name all these like childhood, programs to adult, content. But, Paramount has been a big loser for me, especially then they've reduced that dividend recently this year. And, I always I don't just track dividend increases, Dave. And, I recommend everybody track not just, again, winners, but also the losers, any cuts you've had. And they are one of, a couple of cuts, I've had, this year. Usually don't have many, some years I have 0 cuts. That's the goal, obviously. But Paramount, along with, obviously there's another company, but we'll see if Bert touches on them. But Paramount was a big impact to my portfolio, sitting at a couple $1,000, unrealized loss right now because I haven't sold out of the position yet. So I'm still holding Paramount. So that has been a loser. What resonates with me is my background isn't in streaming and media, right? So though on paper everything looked great, everything sounded great, but obviously once you start analyzing industry reports and competition, I mean, just look at Disney. Obviously there's Netflix, Amazon. You could look at kind of how much spend they have. You could talk about Warner Media Discovery as well, which is why AT&T divulged that, was just how much money is needed and required to continue to create content and to offer the best service for the consumer. So definitely lesson learned, holding on to Paramount still, guys.
Before Bert goes there, I'm just going to jump in and say, I've had a couple of dividend cuts this year as well, and they're not fun.
No.
The dividend raises and increases are way more pleasant than the cuts.
Yep, 100%. Yeah, I've got 2 bad ones this year. Paramount obviously being one.
Yeah, and I mean, I think just to add to the Paramount thing before we go into a different one, it's kind of crazy with the streaming services, how much the hype and just the cheap debt propped up that industry altogether, because the spending was obviously floated by companies that were taking out this debt on super low interest rates. And then once interest rates rise and you actually have to make the business decisions, it's funny how much the dynamic changes in one sector. And that sector has just been turned upside down because nobody wants streaming anymore. Disney doesn't want it. Disney doesn't want it. Paramount doesn't want it. AT&T clearly didn't want it. The only one that seems to want it is Apple, but they're in a different dynamic. Right. Yeah. So, all right. Well, my loser, I'll take the bait then. I guess I'll go with AT&T.
I did notice there's a lot of AT&T videos on your YouTube.
Yes, there are. Because
and that obviously your YouTube channel will be linked in the description.
Oh, thank you for throwing that down there, Dave. But I mean, look, AT&T has a long history on our website, and this is the important thing. I think this is the one thing why Lanny and I are just so open talking about it. For the important reason, it is important to talk about your winners and your losers, because it shows that we go with it too, and we're not 100%. We don't bat 100% here. I think that's the important thing.
Yeah, nobody does. Right?
No, at AT&T, when you take the long journey, obviously they had their long dividend history before they got into the streaming thing. And I think that's what initially attracted Lanny and I to them. It was the long-term dividend history. It was their position in the wireless. It was their long-term dividend streaks that they were doing. And that's what got us into the position. But what happened, obviously, were the multiple acquisitions, the massive debt fundings from there, and just selling the vision of them becoming the all-in-one, the streaming giant too. And that's where it really went sideways for AT&T. And as you can see, Lanny and I were in on the turnaround. We're not going to hide from it on the whole having Warner Media Discovery and separating them from it. We were excited for it, and that quickly turned sour when they had the dividend cut, when the streaming kind of collapsed, and they had the new CEO that just said, "We're going to split this up. We're going to spin off Warner Media Discovery, Warner Brothers Discovery, merge with Discovery, and then your guys are going to be left with picking up the ashes from this position." And overall, I'm down looking at this now in my brokerage, $2,000 on my AT&T position alone. My Warner Media Discovery position is down $870 from there. So it's down heavy amounts in these because neither of them have done great since the spinoff for different reasons. For same reasons Paramount's doing terrible, Warner Media is doing terrible. For the same reason Verizon's doing terrible, AT&T is doing terrible. It's just we're looking for some positive news here in one of those sectors.
To kind of piggyback too, and obviously when you think about all of these platforms that have merged together, you got to think too, they're still probably trying to figure out how to merge into the one platform, which I know, I think HBO is going to, like, there's that converge of platforms. I think Paramount's doing that converge of platforms. So I still think that there's a lot that they have no idea how to maneuver / get the consumers ready for it, et cetera, et cetera.
I'm going to laugh, though, one day, because what we're going to have is everyone that went away from cable for each one of these streamings. Nobody wanted the one package. What you're going to turn out is there's going to be one internet solution that's going to have packages from all of them put together. And then
that's exactly the point I was about to make, is I've touched on that in the past. Just like, 5 years ago or so, it was all about cutting the cord, getting away from cable and satellite and going to streaming services like Netflix. Was obviously so popular in the beginning when it was like, what, $6 a month, and it had tons of movies on there. And then it just got more expensive, then more streaming. And it's like, now if you had all like 10 or 12 different streaming platforms, you'd be paying twice as much as what a cable bill would be, right?
Yeah.
And so exactly to your point, Bert, is I've touched on that in past episodes and probably tweets about it's going to have to come to a point where some of these companies get together and offer a bundle, right? So you have your Netflix and your Amazon Prime and your Disney Plus all together, right?
Yeah. Yeah. It's coming there. I mean, we're looking at my family's shopping their cell phone plan, and we're looking at the new, like, we're at AT&T, and you know how it is when you switch, that's when you get all the benefits. Verizon now has it's at the Verizon, you can add on the Disney Plus, the Hulu, the few options. So they're building it. They have their own slight version of a little bundle. So it's interesting.
Right.
All right. We've talked about winners and losers. Let's just get into, I guess, maybe some other, interesting things that you might have in your portfolio. Anything? Obviously, you guys are both in the U.S. And so I think you're probably invested primarily in American companies. So, and I know there's tons of winners in American companies and with the dividend aristocrats and kings. And so, yeah,
right.
I see a smile on Lanny's face. So it sounds like he wants to take this.
Well, I will say, gosh, everybody listening right now, telecom in Canada is very solid. There are some beauties. Dave, you want to kind of speak on some of the big telecom companies in Canada that have just, and I'll talk on another industry, how it relates to it. But yeah, what are some of the big telecoms, by the way, Dave, in Canada?
Yeah, so Bell Canada, TELUS, and Rogers, and then there's kind of a fourth one coming into play now because of a recent merger / acquisition between Shaw Cable or Shaw Communications and Quebecor / Videotron. So that's going to become kind of a fourth big player nationally. Since the start of this year, maybe the last week of December, I've been dollar cost averaging into Bell Canada myself and really growing a nice position there. I wish it was 10x the size of the position it is, but each quarter the dividends are going up because kind of same to Bert's earlier point. You just dollar cost average in and you keep reinvesting the dividend and it's going to increase, right? So. Those are the big three. Plus, like I said, that fourth player coming into effect.
Yeah, so very consistent, well managed. Businesses in Canada. It kind of reminds me of the banking sector in Canada. I know, Bert can touch on it too, but I've heavily invested into one of the big six. Canadian Imperial, ticker symbol CM here in the States.
CIBC.
Yep, CIBC. I own over 300 shares of Canadian Imperial or CIBC. That position's over $12,000-$13,000 in my portfolio. Producing right now on a converted basis. I'm looking at my worksheet right now. Over $750+ in forward income. So as that rolls in, almost $200 a quarter. Picking up 2 to 3 shares at a time, depending on the share price, but. I've always,
and that's in U.S. dollars because you're buying that on the New York Exchange.
Yeah. Correct. So again, big shout out to Canada, always delivering. I think better managed industries, we'll say. Now, so some other unique positions in the portfolio. The one I've been pretty big on here in 2023 that doesn't get talked about much, at least this individual stock. here on the U.S., Dave, and community. I think a lot of people talk about United Health, UNH, but I've been actually acquiring shares in Elevance Health, ticker symbols ELV, what used to be called Anthem Insurance here in the United States, still is called Anthem, who your health insurance is through. Obviously, Canada's like, health insurance, what's this? But, so been able to acquire about 7+ shares. So that's a little unique position in my portfolio because they don't even yield 2%. They yield around 1.3 to 1.5%, but their dividend growth rate is, I think, over, we'll call it double digits. I think the last increase was over 15%. So that one I'm kind of using as like a good punch to the dividend growth rate on the overall portfolio. Because I know in a few years, the yield on the cost basis is going to be pretty significant. And, was able to catch recently, I think they're trading at around $470 plus right now, $470 plus per share.
Wow.
And recently was able to grab a share, at like the 410, 415 range. So anytime I see a drop in that price, I like to try to grab a share, which is, pretty expensive from a price standpoint. But so that's a unique kind of untalked about stock that you don't really see much is ELV on the U.S. exchange.
Yeah, definitely a whole different animal in the U.S. with healthcare and healthcare insurance and being able to buy those companies. Just to touch on your point of the Canadian banks, same time frame as Bell from January or perhaps the last week of December. I've been dollar cost averaging into Bank of Nova Scotia, Scotiabank, and both BNS.
Yeah.
So another one of the big six Canadian banks. So.
Yeah, I mean, when in doubt, the big six Canadian banks. It's like the rule. It's like one of the certainties in life. Like, yes, and if not, just pick a big six bank, and you're going to be in pretty good shape at some point.
Yeah. You know how long they've been paying dividends for?
Over 100 years is my guess.
Yeah.
So actually, BMO, Bank of Montreal, is the oldest of dividend payers since 1829. So coming up on a 200-year anniversary.
Fun little nugget here is my aunt lives in Fort Erie, and actually, before I used to live in the surrounding Toronto area, and actually at one point I think lived in Montreal, and she had a long 25+ year career at Bank of Nova Scotia. So, in my wife's account, we own on the U.S. exchange BNS. So. Do represent the Bank of Nova Scotia stock for sure.
Nice. Yeah. BNS has been paying a dividend since I believe 1832 or 33. So it's on a 200-year anniversary here in the next 10 years or so. Ooh. Obviously they haven't had a dividend increase all 200 years, but just the longevity of paying a dividend for nearly 200 years is impressive, right?
Yeah,
when you literally had to ride your horse to the bank to buy your share and get like a paper stock, right?
Yeah. How do you even? Yeah, you just all meet by the Wall Street tree and just go trade stock back in the day.
Oh yeah.
Yeah. So I would say if we're gonna parlay off of just unique positions and ones for this year, one that I'd been building up in 2023 is Tyson Foods. Ticker symbol TSN. Obviously, the meat, the chicken maker. They've had a really tough year dealing with the price increases on the top line and on their cost too. So not only they pass the cost along so much to the consumers because the cost of transport, the cost to produce the meat, to raise the animals grew so fast.
The cost of everything. Inflation has been crazy the last 2 years, so the price of everything has gone up. So.
Yeah, and then you pass it to the consumers, and consumers finally reach that breaking point of we're just going to move away from buying the Tyson food. So you always wonder what point the consumers are going to fight back in the inflation game, and Tyson felt it. That said, it's still the major player in one sector that's not going away anytime soon. People are still going to be eating their produce. They're still going to need all this stuff. Tyson, they just have to fight through inflation. So I built rapidly a position of 100 shares. I started buying them when they were in the 60s, and I really started loading up when they dropped around the high 40s and low 50s. So now we have 102 shares. I'm looking at it. Average cost basis of 58.22. So I'm still a little bit in the red here, but that was the one that we built up for my portfolio rather quickly in 2023.
Interesting. I do want to talk about kind of your social media presence and working as a team. I'm going to share both your website here shortly and your YouTube channel and your Twitter handle as well. Like you guys do everything as a team, it seems,
Mhm.
and obviously that's a little bit different approach than most people take. So
Yeah.
first, I'm going to pull up your website here,
Ooh,
and we
nice.
can just talk about the website first and sort of how you share the workload, how you came up with the idea of even working together on, in your social media presence, and
Yeah.
yeah,
Look at that.
take it away.
Look at that beautiful article right there, Dave, talking about Funrise, the full Q2 update there. Again, another passive income investment. They produce dividends right there. But yeah, I at one point, and hopefully nobody goes back to try to look for it. But I at one point in 2007, 8/9. Even maybe a year after that too. I used to have a few different blog sites that I had centered around passive income. So before the age of 20, and I think sent Bert some photos of like some old notebooks I found of me talking about passive income in my scratch notebook back before I was even 20 years old. So when Bert and I started to work together, talk about dividend investing, it was like, oh yeah, we should, let's do the blog. Bert and I both jointly just said, let's do the blog. We came up with the name back in 2014, Dividend Diplomats. And, now that we've introduced YouTube about 3+ years ago, we try to do at least 1+ article a week on the blog. We kind of trade off, one article almost per person. So, you might see 2 articles a week on the blog between Bert and I. We have our standard ones, the income, the watch list. Bert hits him hard with the dividend increase expected for the upcoming month list all the time. We have a lot of fun with that one because we, make our estimated guesses of what they could or should look like. And it always gives the readers an indication of what to look out for in the upcoming month for increases. And we just have some, really, really solid dividend topics on there as well. I think recently this year you'll find like, oh, do we just stop the 401k and just go all in on the taxable? I talk about the strategy behind Vanguard ETFs, and Bert's came out with a few cool page ideas as well. But yeah, so we kind of share in the writing of it. I know I don't know, there may have been at one point a few years ago a few other blogs that had kind of like a duo on the blog site, but I think we're definitely we have lasted probably the longest, and we've been writing for almost 10 years. But yeah, go ahead, Bert. You can add on to that.
Well, no, I think too with it, like it's helped having 2 people as well from it. Like Lanny and I, before we started the blog, like we worked so well. Like him and I just I'd say work well together in the sense of like there's no one person that has to do something. When I say has to do something, it's like we're both just open to doing whatever with this. So, like, there's no like, hey, Lanny, what the heck are you doing? Or Bert, what the heck was this? It was just like, hey, let's have fun with it. Let's enjoy it. Like if there's an investing thought we have, there's something, tweet it out. If there's something, like, let's just enjoy it, have fun. And I think that's really helped it make it so that you want to write, you want to record the videos, and you want to put the stuff out there on social media. But also too understanding too, like we both communicate, we both work to make sure like, hey, at some point there's coverage if need to. Like we help each other out when one person can't, the other person's there too. So it's been nice to have both of us together, and that's how it started, and that's how it's still going on, even as now we've grown and we have kids and we have busier schedules too.
Yeah,
Yeah, it's definitely helped out in the workload.
And as you see me clicking around through the website there's tons of information, a lot to read, a lot of different blogs and sort of everything about you yourselves right there. So
Yeah.
I will definitely put this in the link in the description as well.
Mm-hmm.
So any viewers or listeners, please feel free to click on that and check out their website. You mentioned your YouTube channel, and I see you're up to 17,000 subscribers. Wow, that's amazing.
Yeah.
And I actually was watching this video this morning of your 10,000 subscribers. So I'm like, I gotta freeze the screen right there.
Oh, yeah. You know what? You know the we actually had to change some music in there
Yeah.
because YouTube copyright is a real thing, guys. So
Yeah.
so we actually I'll say we may have gotten hit with the copyright, so we had to change some music to the background of that video. So just for anybody else recording videos, Dave, yourself, and obviously others that are doing their own channel, just be aware of that. Yeah, that was a fun video though. Macho, Bert, and Hulk Lanny over there, guys. 20,000 subscribers. You may have to see some new wrestling entrants come onto that one once we hit that threshold too.
Nice.
And one fun thing too, Dave, again, appreciate you for sharing the links. Kind of what we do that maybe not everybody does on our blog as well is you'll see our full transparent dividend portfolio. So you'll see every stock we hold as well. We update it almost weekly. I'll say we for sure update it monthly, no doubt about it. But we always try to be transparent into what we hold. So that's on our blog site as well.
And I did also, I really like doing this when you click on the videos page and you just scroll and scroll and scroll and scroll, and you're like, wow, there's a lot of videos on here, right? A lot of videos. And I scrolled all the way to the bottom this morning. I'm like, for over 3 years now on YouTube. So shout out for, for keeping with it and sticking to it on that front.
Oh,
Yeah, you know how hard it is just to stay on a schedule and to, kind of stick to normalized, I guess, video release schedule. So, Dave, props to you as well.
Yeah, thank you.
Yeah, and I think also too, what helps with the videos and what helps with a lot of this too, to make it easier is we keep saying, we're talking about and we're writing and we're doing all the stuff that we're doing anyway behind the scenes. So these are conversations that Landy and I are having anyway when we're talking about stocks. Like, this is how we're looking for our own investments. This is what we're doing. We're talking about the exact same things to everybody on YouTube that we're having the conversation. So it makes it fun and it makes you want to do it because we want to find more stocks. We want to keep buying stocks too. So it's like, yeah, let's keep getting ideas. Let's keep talk them out. And sometimes I'll have an idea and I look at Landy and he's like, nope, I'm not buying this one. You're on your own here for this one. But like, that's the fun of it too.
Right. Yeah, no, that's fun. You have that ability to agree to disagree with each other too when you're bouncing ideas off of each other.
Yeah. Yeah.
And
after you. Sorry.
I was just going to say the last tab I'm going to share is your Twitter page. So you can find Bert and Lanny at Dividend Diplomats, but there's not all the I's in there. It's like DVDND Diplomats.
We tried. We're hoping when I wonder if that's going to become available when Elon scrubs out all the inactive Twitters, if the actual name's going to come. But that's a story.
I think there was I don't know if there was a character limit there or what.
Yeah.
We'll have to, back when we created the handle, because we've had the handle since when we created the blog. So I think our handle's almost 10 years old as well.
Right. You might be better off just to keep it because that's what people know you as now.
That's true.
Hey, 31,000 strong on Twitter, guys. Let's go.
Yeah. So yeah, you guys are doing great with your social media presence. Over 30,000 on Twitter, almost 20,000 on YouTube.
Well, thank you, Dave. We appreciate it.
Let's talk about, I guess, a little bit of the YouTube creator economy and actually getting paid by YouTube. And as a team, how are you guys divvying that up? And what do you do with the income? Do you just put it back into the channel? Do you take it to invest? Do you buy your wife some flowers?
So yeah.
Dave, why don't you? I was going to say, Dave, why don't you guess which one of the options?
Putting into dividends. Oh, paying taxes probably.
Yeah. So yeah. Bert and I, we would say, oh yeah, the millions of dollars that and Dave knows this too. The money that we make off YouTube, which is pretty minimal. We've had some strong months, but
we're not making Mr. Beast money over here.
Yeah, we're not. Yeah, it's a very tough game. Advertising obviously took a pretty tough hit too, I think, in 2022. So I'm sure all content creators saw that. But yeah, the few, couple $100 a month maybe that we'll get, we'll set aside and do a high yield savings, earn some interest on that. And then Bert and I, we come from like a banking industry background. In public accounting, we audited a lot of community banks in the Midwest, some on the other coast. Bert had some fun times in California. I had some fun times in Idaho as well.
I was there in Idaho.
Yes, you were. So what we have done as well is with some of the earnings from the YouTube and the blog is we invest into we have an investment LLC account as well. So we invest money
awesome.
as the Dividend Diplomats. And Bert, what do we invest into?
Community banks. So that portfolio took a little bit of a hit in March, April.
Don't worry, we did not own, Silicon Valley or Signature or First Republic. We weren't even looking at any institution that is of that size. Most of the banking stocks are like a percent of what those large institutions, were. So we started because there's a unique community bank space here in the United States that, very low risk banking institutions. And because we know that industry fairly well, and we always felt like once we left public accounting, which we both have, and gone separate companies to work, we wanted to kind of start investing into some of the, arena that we used to audit in.
Yeah, because we know them well. We knew the balance sheets like the back of their hands. We could read everything that was going on, income statements too, I should say. Now, we knew the full financials on there, and we knew the communities too, because it was Ohio, Pennsylvania, Western New York, all economies that we see and we're around all the time too. So we found them, and then it's fun. I think that portfolio produces a nice, I can't even remember the income off the top of my head. It's a solid amount of income.
Dave. Yeah. So the Dividend Diplomats Investment LLC dividend community stock portfolio, we'll call it community bank stock, produces over $1,500 in dividend income. And, the 1 year, we've kind of taken a fun approach with that, guys. And, I always recommend, try to find the purpose of why you're investing, the purpose of the income. So one of the purposes that Bert and I kind of felt, this was before the pandemic. So like in 2019, I think the annual income was like at that point, maybe $700 or $800. And again, so split between two, Bert and I call it like $350 to $400 each. We were like, hey, let's do a Dividend Diplomats, trip. So we each took our wives and we went to like a vacation and used the dividend income to help, fuel our annual meetup.
Yeah.
Nice. No, that's good.
Yeah.
That's perfect, right? Because then you're not taking that out of any other account.
Yeah.
So, whether it's a savings account or an emergency fund or wherever, just right out of your own checking account or
right.
So
that was the beauty of it. But we haven't taken a trip in 4 years, so
yeah.
So now you can afford a nice trip somewhere, Italy maybe, or
Japan. Yeah.
Yeah, good way to subsidize some of the cost of doing a trip and to kind of get together. And we recorded videos on that. We wrote articles and went through a bunch of stuff when we did that trip too. So it's kind of cool to do that in a different space.
Yeah, just coffee overlooking a beach. Just doing that. It was a lot of fun.
Awesome. So plans for the future for the Dividend Diplomats, just keep going, just keep grinding away.
Yeah. We're not stopping now. We're about to hit 10 years and we're just going to keep on going. There's no reason to stop. Just keep going. And if anything, it's just seeing this, getting involved with the community. It just makes you want to keep doing it more. Like that's the takeaway. It's like, we want to just keep pushing, keep going, because we love the interaction. We love the banter back and forth on Twitter, the comments in our YouTube. Like that's really what energizes it too. Obviously it's amazing. Like besides doing it with the two of us, like it's a lot of, besides that component of it, it's the people, because what we found is the community is awesome. Everybody's moving towards the exact same goal. Everybody wants to get to financial freedom. They want to make themselves better. And that's a unique thing about DivTwit, FinTwit, and all the people out there. It's like everyone's hungry. Everyone encourages each other. It's a very positive Twitter environment. I think it's a very positive community to be a part of. So why would you want to stop?
I would agree.
Yeah, why would you want to stop? If anything, just keep going and keep pushing to do more.
Yeah, I mean, to echo Bert, it's, even if we find one new person a week or a month that, gets turned on to first just investing in general. And then, obviously, selfishly, dividend investing makes us extremely happy. But, anybody that just says, oh, yeah, I should start doing this, that's why we also touch on ETFs, because then it helps even somebody who doesn't want to do individual stocks. Like, oh, yeah, I could do the VOO, or, Bert's been doing the SCHD, and there's me with the VYM. US ETFs from Vanguard, and so it gets them at least going, oh yeah, I don't have to pick the Pepsi stock or the next big individual
Pepsi
stock.
and Coke, or
yeah.
I actually saw one of your thumbnails too, was McDonald's versus RBI, and it was like, oh, that's interesting. But then again, you're right. You pick something like an SCHD and you just get everything, so you don't have to think about it. You have a professional money manager watching that all day, every day.
Exactly.
And yeah, so it's another kind of example of a set it and forget it. That I don't own SCHD, but it's basically on the very top of my watch list for American stocks for sure.
Yeah, and then I think hopefully shorter to medium term. Once we hit some sort of financial freedom goal, Bert and I, will be in person doing more content, better videos and stuff like that, and we look forward to making it even better in the future. Yeah. So nonstop, and it'll hopefully continue to get better as well.
That's the exact same goal here on the Passive Income Podcast, is to continue going. I have no reason to stop, but yeah, hopefully in the future be able to make better, more quality content, better edited videos, better, just improving. Improving my background, so you're not staring at my stairs and my curtains in every video. But
I think I just saw your dog pop in the background, and I love it, Dave.
He likes to make appearances. He's a social media hound. Actually, he's
the star.
He truly is the star. He's been on quite a few. There was one episode right around now, the 40-minute mark, where he just barked like crazy, and I jumped, and the guest jumped, and I'm like, well, now that everyone's awake again.
Yeah.
Hey, Dave, I need to see that shirt a little bit closer here. That shirt that you're wearing, heck yeah! #dividends. Let's go. I love it. I was like trying to make it out. I was like, oh yeah, I think that says dividends. So it's awesome.
So that's shout out to Patrick at investing shirts, I think is his Twitter handle, and it's you've seen here in the ticker symbol below.
Yeah.
The ticker symbol right there, that ticker symbol. Posse t-shirts, hoodies, toques, ball caps, and coffee mugs available at buyinvestingshirts.com. Use code word Posse for 5% discount. But yeah, Patrick's got tons of other great merch over there. He's got like Bitcoin merch and this like dividends, and so check out his website for sure. I noticed on your YouTube channel too, the store that has Dividend Diplomats merch as well. So, and I see you guys both drinking out of your mugs as well. Yeah.
Dave, do you have a coffee mug for your collection, Dave? I think that's the question we're going to ask you here.
Yeah, there is. It's on the website. I don't physically have one.
Yeah.
Here myself, but Patrick has them.
Yeah. Well, I love it. Well, we'll have to see if we can add one to your collection here with the Diplomats coffee mug as our gift to you, Dave.
Yeah, that would be amazing. I'd appreciate that. So, before we sign off, I see we're almost up to 45 minutes. I guess just any last things you'd like to touch on?
No, I mean, I think not. No, but I mean, I just think it's important to have conversations like these to just get as much news out there, because it's kind of like what I was saying earlier. The more you talk about it, the more you get people started. Even if you have to start somewhere on this journey. And I think that's what sometimes gets lost. You see on Twitter, you see on YouTube, large dollar amounts being thrown around a lot of time. You're like, geez, how am I ever going to get to
$100,000 in dividends? Yeah.
Yes. And you do that by getting your first dollar of dividends, by getting your second dollar of dividends, and your $10. So if you haven't started, don't be scared by the large numbers, just start. And then you'll get excited. You'll want to keep going. And that's the most important thing, is start at some point, build it, and then watch it grow, because that's the fun of the game.
You've probably heard me say before, or tweet my Moneyball. I call it my Moneyball reference. Just get on base. Just get on base.
Yeah.
Get hit by a pitch.
I say it all the time.
Bases on balls, like ground rule double, whatever it takes. Get on base.
I say it everywhere. People get so focused on the home runs, they keep focusing on getting the one swing that'll score you 3 runs. Just you can win through singles, you can win through doubles. Even to your point, getting walking game. I love that. Like you win that way too.
You're never going to hit a grand slam when you're the leadoff batter.
That's true.
It's mathematically impossible.
Yes.
You know, from my standpoint, guys, you know, dividend investing and investing for passive income to get the financial freedom. You know, I always call it, there's just so many fun milestones you can reach along the way, as you guys have indicated. First dollar, your first 10, 100. And one thing, you know, I've been mentioning is don't forget to celebrate when you do. You know, it doesn't have to be like some lavish celebrations, but definitely like take it all in once you hit those thresholds. And, you know, because you put in a lot of
small
work.
wins are so important, right?
Yeah, celebrate the small wins. You know, something that I wish I would have done because I didn't. So that's why I've been talking more about that, is celebrate the small wins, because, you know, you come a long way from getting those small wins. So.
Okay, awesome. This has been an incredible conversation. I truly appreciate the both of you coming on and spending some time here with me on the Passive Income Podcast. So, yeah, thank you so much, both of you, for your time. And with that said, if you're still here over 45 minutes later, subscribe.
Yeah, guys, subscribe to Dave. You know, he's rocking it out on all his channels as well. You know, Dave, I know it's a pleasure being on here. Anytime you need us, just give us a holler, and we'll touch on any other topics you want here on your Passive Income Podcast channel.
Yeah.
Awesome.
Thank you for having us
so much. Thank you. And like I said, subscribe.